So today we're gonna walk through the update on the market structure. We'll talk about gold and we'll talk about semis. And we'll start with the market structure. So let's come back to Tom's question. Did the view change since we last met here on this program? And I believe we were talking about the market structure somewhere here.
hmm
Um, our assessment at that time was that the rally that we have had since the December low was too aggressive. There was a lot of momentum. There was a lot of buying there. And who was buying there? We saw that in the volume signature. Institutional money managers were buying. So that created that buying momentum that carries us back above the support level. So at that point of time, we were thinking that this is not the type of the rally that we would usually see in a bear market. It's too aggressive. So that was the assessment at the time, and I think it was a good call because we're definitely overcoming the intermediate highs in October, November, December, and with higher highs, higher low structure. So that just confirms the overall structure to the upside. Now, having said this, this is just um, a rally within a trading range, and I'm just trying to take another color here. Bear with me for a second. Q. Well, let's start from the beginning. Usually, we would look when we assess the market. We would look at the long-term structure first. And since the 2009 lows, and I've shown you, 2 months ago, and I'm sure everybody's showing you this, we're still in the uptrend. And what is happening in the long-term picture is that we are in the consolidation, and this consolidation happens within the uh, up channel that we had since 2009. So the best conclusion that we could have here is just continue consolidating. And we'll talk a little bit more about how this consolidation could unfold. We're able to have on the more intermediate term picture a couple of points of resistance. We are in the resistance cluster right now. On the S&P, we got there, and now we're trying to see if we're going to come back under the buying climax resistance. So we define the intermediate trend as a trading range. In this trading range, as always with Wyckoff methodology, we want to understand the semantics as to how the structure unfolds. So we had a climactic action into the high in January of 2018. We had a very quick reaction to the downside that was climactic in nature on the increase of the volume signature, increase of the spread, velocity, momentum to the downside, stop in action on the selling climax, and then the later retest as the last point of support retest, an area of absorption that produced this rally, and then momentum started to fade away into the upthrust. Change of character, which defined that something is going wrong. So, and this is where we were switching our bias, at least short term. This was the most difficult area, just because absorption is not going to happen this way. There is quite a lot of volatility. That could have been an indication of the continuation. And obviously, when we had a move to the downside, you have to assume that we are in the unconfirmed bear market environment. Why am I saying unconfirmed? Well, because you would need to have a lower high, lower low, and then a breakout. Um, the way how the rally, and this was what I've started, the way how the rally unfolded suggests that this is not a bear market rally. So therefore, structurally, we would determine that the low in December was a terminal shakeout in a much larger structure. What is that structure? Well, probably we are just in the trading range. And I'm going to show you some analogs of this type of structure. It's just a very complex structure that might last for quite some time. Actually, in some instances, it could last for years and years. Well, let's look at the short term now. In the short term, we're still in the uptrend. Again, a really good momentum to the upside. And then after that, look at this momentum kickoff. And then after that, if we would define where that momentum ends, this is where we're starting to see a different stride. And this is very typical after the momentum push, but we're still having higher highs, higher lows, and until we have a significant change in behavior, something akin to a large bar to the downside that breaks this short-term trend, commits below that support, and hopefully produces an increase in the supply signature, we probably would still will be talking short-term about the uptrend. So until it's done, there is really nothing else to say. So here is our market analysis picture: long-term uptrend, intermediate time frame in the trading range, short-term time frame in the uptrend. All right, well, let's talk about analogs, and this is something that I brought to your attention, about 2 months ago. What is this structure right here, where we have such a violent move to the downside, absorption as the reaccumulation texture takes place, a rally into the upthrust, then a distributional pattern, and a very aggressive move to the downside as a possible shakeout with the very aggressive rally after that. Okay, well, I've shown this before. I'm using an example of Tesla. Tesla in 2013-14 has been perceived as the stock that's going to outperform for quite some time, that has a long-term, a very bullish picture. So therefore, as we go into the change of character after the climactic action, we're seeing elements of reaccumulation. We're seeing elements of absorption that suggest the rally. And when the rally happens into the previous highs, we're starting to see a distributional pattern. This is more of a local distributional pattern than just a major distributional pattern. And it just suggests a move to the downside that might take us below the levels of support. And it happens kind of in the same way. There's a lot of aggression to the downside, with a significant commitment below the support area. It's out of this oversold condition where institutions are seeing value and they are finding liquidity. And those are the two things that institutions are looking for. They want to buy a short-term weakness in the long-term trend, and they want to have enough liquidity to open a significant position. And we have both of the requirements satisfied on this shakeout. And that's why the rally is so aggressive, because they also buying on the way up. Now, the Tesla analog brought us back into the highs of the previous reaccumulation and distributional highs. So that was the expectation even when we had our conversation 2 months ago in February as to what might happen. We said that the rally might just continue its way into the highs and might retouch those highs. So we're exactly there. Look at another example, another analog that we have here, Dow Industrial in the 1970s. And again, we have the scenario where after the uptrend, we have a pause that resolves itself into a rally. We have a local distribution and then a short-term downtrend that goes into a shakeout type of action, and then a very aggressive rally to the upside. Now, the key to this analogs right now is what happens next. So what did happen next? Look here. Look here. And that's why when we were talking with Tom last time about where the market's going to end up, is it going to be in single digits for the year or in double digits? My guess here, and I'm really guessing here, I'm speculating with this call, is that we are going to have a reaction first that's going to produce some volatility. It could be very seasonal going into the summer or maybe into the earnings period. And then we should have some period of absorption of the supply that's going to come. And we see this in both of the analogs. First, a sharp reaction to the area of the support, and then consolidation. That is the reaccumulation scenario. So as we look at our current picture, what that suggests is We are, first of all, very close to the high. Maybe we have made this high. Again, we have to see something significant, a change of behavior bar. And then we're probably going to have a reaction that's going to be the largest reaction since the low in December. That's going to produce a lot of bearish sentiment, especially in weak hands, and they're going to be giving up their positions. Also, don't forget that the money managers have made the money for the year. They are ready to to call it a year, and they're just ready to take the profits and secure those profits. And we see this, selectively in some of the stocks and some of the sectors in groups. So that's could be the reason also of a local capitulation here that could bring us, to the lows, maybe to the lows that we've experienced in October, November. And then I would be expecting some kind of trading range. So it's all timing after that as to, where we're going to end up with this. I also want to show you really quickly, how those rallies developed in Tesla and the Dow in the years that I've shown. Well, after the shakeout, out of the extreme oversold condition, a very aggressive rally. So we're seeing institutions buying on the way down and then buying on the way up. And look at this. In both cases, we have a stop in action before the final move to the upside. Look what we're doing now. This is the Dow. And obviously, the Dow is underperforming the S&P and NASDAQ, but we still have almost the same triangular formation. This is just uncanny how those analytics sometimes work. And in both cases, we had some kind of local distribution here that produced that change of character reaction that we could expect. So that's why I would say that just be cognizant of how the price behaves in the near term going into earnings. If you're going to see a change of behavior, we're probably done with this rally, and we're probably going to see some profit taking that's going to be more meaningful and more significant. All right, now let's talk about gold and platinum and copper. The gold has a very big formation, and it's just so much fun to go through this. And by the way, in the yesterday's class, in the wake of market discussion, which I conduct with Bruce Fraser, we discussed gold, and we didn't go into gold stocks. So this is what I'm going to do today, for our students and for all of you who are listening right now. But the discussion yesterday about gold was all about this big structure. It's huge. Since the selling climax in 2013, it's been just nowhere. If you would have bought, gold somewhere here, you're basically breaking even at this point. But there are so many things structurally that has happened. There was a really great minus sign of strength rally that suggested that there was some kind of accumulation on the way up after we were going down and creating lower highs, lower lows. So that was a really positive sign. Then we had a reaction that had a lot of bearish characteristics short term on the daily chart, but it still created a higher low. That was another positive. Another attempt to go up, and another reaction which has the characteristics that are more bullish in nature than the previous reaction. The spreads diminishes, the volume signature diminishes, and supply is going lower. And then again, we are making a higher low. So bullish on the way down, and then bullish on the way up. So now we are at a very interesting spot. For 2 times, we were trying, to overcome the resistance, downsloping resistance that was created by the downsloping support lines right here. So we are at it again. This is the 3rd time, and now we are coming out of the apex formation or out of the triangle formation. Usually triangle formations will be associated with indecision, where the sentiment is neither excessively bullish or neither excessively bearish. And out of these formations, usually the price rallies pretty fast. And this being the 3rd time of the test of the resistance, in my opinion, I think that we are trying to break out. And I think this year, we're going to see this breakout to the upside. Now, if it breaks out and if it accelerates, I'm thinking about 1400 as one of my targets right here. And I wanted to pose a question to the audience, to the listeners. Where do you think gold could potentially be price-wise at the end of the year? Would you say that the gold could rally above 1400, or would gold stay below 1400? I have a stake in this already. A pack of Coors Light, Tom, I believe. So we'll see how that's going to end. That's going to be a fun bet, and I think I'm just trying to figure out and to win this bet. So we'll see what's going to happen. This is very interesting and this is very fun. So you know how with Wyckoff methodology we do horizontal counts. So there are 3 segments in this whole formation. If we would count this whole thing, we could divide it into 3 big segments. The first segment suggests that the price could potentially go to 1886. Now think about where the all-time high is, 1923. So this is a very logical target for us. It just basically brings us to the previous high. Okay, we want to go a little bit crazier and we want to say that, well, what if it's going to be a long-term campaign? Could we include segment number 2? So that brings us to 3300. So this is a very bold call right here to say, at 1250 about. But if gold is going to go into the trend, looking at the causality of it, so many years, the trend could be sustainable. Okay, and then the crazy call, 4352. So here I want you to stretch your imagination and think about the campaign that we have had since the lows in 2001, when the price of gold was $250, and into the high of 2011, where we hit 1923. Obviously, it took 10 years, but it got there. And maybe this is a little bit of the thinking that we should have for this type of big objectives, depending on where we are. Okay, well, definitely I would be concentrating only on segment number 1 right now. There's nothing else to do. Each segment has to confirm itself. Okay, so how else could we trade gold? Well, through different stocks, gold stocks. One of them is GOLD, Barrick Gold. And look at this pattern. What I like about this pattern is that with the downsloping formation right here, we finally recovered. There is less of the progress to the downside. We are recovering on emerging demand. We are seeing that supply is decreasing through the horizontal reaction, which is great. And we are trying to get above the 200 moving average, and this is the weekly. And we are trying to break the resistance line, so which is also bullish and positive. So these are the type of the stocks that we would be looking for in gold sector. Look at this stock, NG Nova Gold. I want to point your attention to the low volatility trading range that we are having lately in comparison to the previous one. We see that the reactions in the previous trading range are much more volatile, whereas in the most recent trading range, the spread is less, the reactions are less, so volatility is less, supply is going down. So these are the elements that are usually bullish elements. And other stocks, AU, and this is a very interesting stock because not only it has the causality, and then this causality in this range again, the volatility is so much less than in the previous accumulation range, but the rally that we just had off from $7 to about $16. This is a really good jump in a few months, 100% return. So that suggests a present institutional presence and urgency to be in that stock. So a sign of strength rally, we are in the backing up action. So we want to look into the structure on the daily here and just to determine the timing for the entry, but looks very, very interesting and good. Okay, another metal here, platinum. And it's just a fascinating chart and fascinating formation because we have a large triangle, an apex formation, and then we have a sprint situation. This is a Wyckoffin terminology. This is where the price commits temporarily below the support level and then recovers quickly back into the trading range above the support level. And here we see that some supply is coming in 2000 into the mid of 2018. We see that in the increase of the volume signature, and yet we see the next high low acts as a test, and on this test supply is definitely lower. Then we have a volume increase that suggests that institutions are coming in and there is some urgency to be in this position. So there is an absorption that is happening in this area, and after that we have a very dynamic rally, short-term rally. So a very interesting metal to consider. Again, I'm discussing different segments here with the PNF horizontal counts. And look at this, 1120 provides us with some kind of reference to the short-term resistance. Segment number 2 could be campaign count that could take us to 1860. And then if we're going to go all the way, this third segment could bring us to 2580, which is overshooting 2286. That was the all-time high. So when you do the horizontal count and those segments, you have to think in terms of what is reasonable there. Is there any elements of the resistance at that target zone? And when you usually see this, it kind of makes sense. It confirms it. All right, another metal, copper. And it's been outperforming. I had some trades, futures trades in it, and we're looking at the most recent formation here, and we're just looking at diminution supply signature, local higher high, higher low. So a sign of strength and a backing up action. And we definitely want to go to the daily chart and to see how we could decipher the timing if there is an entry right there. On the causality counts, the conservative count, which is this lower count, brings us to 3.96, which is right here. That makes a lot of sense, and this is what I was saying. Find the target and then look at the previous formation. Was there a pause? Was there a supply coming in at that point? If we see that type of action, then this target really makes a lot of sense. Aggressive count, this whole count, brings us to 480, and the all-time high was at 4.65. Again, makes a lot of sense to me. But, you know, those are kind of like very bold calls. Okay, now let's look at the semis. This is something that we've discussed yesterday in the class with our students. We looked at the SMH, and SMH had a shakeout, a sprint type of action going into October, November, December lows. But it had its own structure there where it had a local sprint, and then this sprint recovered really fast. And what happens on this sprint is that we have this momentum coming in. We see that the volume signature has increased and more consistent. Look at the texture of the volume, which is so different than the volume spikes than we had before. Those things we need to notice as technical traders and analysts, because that suggests that there is a consistency of buying as the price goes down. Who is buying with that type of volume signature? Obviously, institutions. They have a lot of size. They want meaningful positions. They want value, which is the short-term value in this case, and they want liquidity, where weak hands are selling. They're giving up their shares, and the strong hands are picking it up. So let's look at some of the stocks in this area. And the first one is the latest darling, Xylene. Again, the stock that we've talked so much about, either in classes or here on Market Watchers Live. I'm sure it has been mentioned many times. An apex reaccumulation structure, and then we see that during the market volatility, we're seeing a momentum kickoff with a lot of buying that's coming out of the institutional camp, and then no selling. into the December low, which becomes a higher low. So on the relative comparative basis, a much better stock, a much better selection. And then when we see that, we want to quickly put the Wyckoff label and layer on this structure. So we see how with the higher highs and higher lows, the first rally is producing a minus sign of strength, and then the price comes back into the area, and then a major sign of strength happens, and then the reaction is able to hold on the ground and don't come back into the trading range in a significant way. Why is this stock still interesting? Well, some might consider this a continuation pattern, even though it's coming as a wedge. Some wedges are actually resolving in the up movement and continuation. And look at what we are giving up here in terms of the reactions. Nothing. And that's on the background of diminishing supply signature. Let's look at the next stock. This is Maxim. And with Maxim, we are seeing a very violent climactic stopping action where a supply tail in the volume signature suggests that there was a lot of selling, most likely into some kind of news. And then we're coming back into the trading range on the change of character reaction and consolidating until the market volatility takes us down here in the shakeout type of manner. That shakeout is being tested on the December low. This is a higher low, much better than the market, suggests a possible outperformance, but the reaction itself has some supply signature behind it, so that suggests that there should be a retest of this reaction again. And look at what kind of retest we have. Instead of going into more of the vertical to the downside reaction, we are reacting horizontally. And that's one of the elements of structural strength that we want to observe, because usually that defines the timing of when the price will start going up again. And that again happens on the diminishing supply signature. I think I have one more, Cyrus Logic. And again, I love these patterns where we have a meaningful causality and meaningful structure. A structure where we see a general capitulation, a general stop in action, and even though supply is still present, and it takes us down to the new low, low, and then going into phase C, another lower low. But look at the supply signature, overall supply signature throughout this whole formation. It's decreasing, and then once we go into the sprint, that last commitment below the support cluster, we are only having 3 progressive closes to the downside, and then we're quickly coming back. Now, in a lot of cases, students are asking me, well, I don't see that the demand is increasing on the sign of strength rally as the price comes back into the area of the resistance. The price could move up on the diminishing demand signature under the condition that supply signature is diminishing and or decreasing as well. And it's just a matter of absorption of supply that has happened prior to that. Okay, and I think that's it. Oh, I think I'm on time, Tom.
All right, great presentation. Thank you so much. Really appreciate you coming on, Roman. Look forward.
Thank you so much.
All right, there he goes.